CNBC's Crypto World, I'm Jordan Smith. Digital currencies are mixed as they look to fend off a pullback that kicked off earlier in the week. As of noon Eastern, Bitcoin crossed above the $113,000 mark. Meanwhile, Ether's inching lower, trading at $4,167. And FTX's FTT token surged nearly 21% after a new post appeared on the X account of founder Sam Bankman-Fried last night. An update in his X bio mentions posts aren't coming from SBF himself, but rather a friend, as Bankman-Fried serves a 25-year prison sentence. At one point, the token shot up as much as 40% as people bought into the hype. All right, let's talk about the top stories. Morgan Stanley is months away from offering retail crypto trading through E-Trade. According to a memo obtained by CNBC, Jed Finn, Morgan Stanley's head of wealth management, said the company is preparing to offer crypto trading to E-Trade clients in the first half of 2026. According to the memo, the investment bank is working with crypto firm Zero Hash for liquidity, custody, and settlement around crypto trading. E-Trade is a pioneer in the online brokerage space and pushed the industry towards zero fees as online trading became more popular. Next, sticking with Zero Hash, the crypto infrastructure firm secured more than $100 million in Series D funding. Among the backers include TradFi players like Morgan Stanley and SoFi, and the Series D round was led by automated trading firm Interactive Brokers. Zero Hash CEO Edward Woodward told CNBC that the company is valued at $1 billion. This fundraising comes as companies cash in on a friendlier regulatory environment toward crypto under the new administration, both in private and public markets. Finally, Tether is weighing a fundraising round that could value it similar to OpenAI and SpaceX. Its CEO Paolo Ardoino took to X last night saying the company is evaluating a raise from, quote, high-profile key investors. Bloomberg reported the company is seeking between $15 and $20 billion for around a 3% stake through a private placement. According to the report, the deal could value Tether at around $500 billion. For context, OpenAI's valued somewhere around $500 billion as well. All right, for our main story, I spoke with Danelle Dixon, the CEO of the Stellar Development Foundation. The firm recently announced a slew of new integrations, including stablecoins and real-world assets, with the goal of bringing greater interoperability to the space. I asked her about those integrations and what's ahead for the network. Let's start with the slew of announcements that have come from Stellar this month. You announced the integration of PayPal's PayYUSD and Ondo Finance's USDY on the Stellar network, and you also integrated short-term treasuries through Centrifuge and tokenized real estate with Red Swan. I mean, all told, these assets total around $3 billion. So talk to me about the strategy around these integrations and what they mean for Stellar.
Yeah, it was such a great, we announced them all last week at our annual conference, which was in Rio. It's called Meridian. It was so fun to be able to bring this to life with all of the ecosystem there. Bringing assets on chain is such a crucial part of what we see as the really important next step, which is making sure those assets can be utilized for everyday financial services, lending, borrowing, yield, donations, like all the things that you can think about. And so for us, this was just like the first step. And then there's so much more to do. We don't just want these assets to sit on chain to create volume. We want them to actually create usability. And we think that, we have it's been years that we've been developing the payment network and as well as all of the on and off ramps globally. So to be able to have these assets to be available to end users and businesses, it just creates this full circle, and it's a really important step.
We just heard from the CFTC yesterday. Acting Commissioner Pham announced that the agency will launch an initiative for tokenized collateral, including stablecoins and derivative markets. Obviously, we on Crypto World have been talking about evolving crypto regulation in the U.S., but on the tokenization front, what sort of rules are you looking for when it comes to this technology to bring it to that mainstream forefront?
Yeah, well, I think that it's really important. Regulators and policymakers want the same thing that we do. They want transparency. They want ease of use. They want to be able to have consumers to have protection around the assets that they leverage. So the important pieces is just making sure those are built into the infrastructure that the banks and the traditional financial companies are leveraging to be able to tokenize their assets. What I would love to be able to see is that a lot of these assets that are like the securities assets be able to be leveraged in payments. And this is going to take a step. And this is going to be a push that Franklin Templeton started pushing on this in 2019 when they first started to tokenize their money market fund on Stellar. I think that is going to be a really important piece of making sure that there is this virtuous circle and making sure that the assets can be utilized in a framework that makes sense for the end users, whether that be businesses or consumers. So I think focusing from a regulatory standpoint on making sure that the transparency is there, that the consumer protection is there, but also that interoperability is an important part of how networks actually think about the infrastructure that they're building, because we want it to be that there's not just one network that's going to win all. I love Stellar. I think it's amazing, but you need to be able to interoperate and have these assets move freely because we can't have locked assets. And then the second thing I think, or the final thing I think we need to get to is privacy. And we're all about privacy. This is a big focus of ours. When you see the traditional frameworks come on chain, you need to make sure that we've actually thought about privacy in terms of what's available on chain and how to make it so that it melds really nicely with that infrastructure. And so that is sort of the next phase of what we're going to see from a regulatory framework, but also just from the infrastructure framework.
And what you're talking about in terms of interoperability goes to some of those announcements we spoke of at the beginning of this conversation with PYUSD and beyond. I want to look beyond the US for a minute, because as you mentioned earlier, you held the Meridian Conference in Rio de Janeiro. And a big focus of that event was, of course, global adoption and the idea of tokenized real-world assets. For you at the Stellar Development Foundation, how are you thinking about adoption of RWAs abroad and how it might differ from the US?
Well, I think that one of the things that's so important for, even in the US, that's really important is it lowers the barrier to entry when you actually can change your money market fund to the entry point being $2,500 to $25, which is what we've seen happen in the market. So that's a really important first step in the US. But if we think about like in LATAM and on the African continent, there hasn't been a lot of ability to hold US treasuries before. And so now you can, and you can bleed into that market and make it so that it's just commonplace for them. And that's huge. We see wallets who are already trying to leverage these assets and bring them to their users. And that just opens up a whole world of everyday financial services that a lot of these users and these businesses have never had access to. It's part of our mission. It's part of what the SDF has always been focused on, which is creating that equitable access to the global financial system and doing it with financial institutions that are going to benefit from it as well. So it's a nice two-sided market, and we want to see those markets grow.
Yeah, I want to end on a broader question as we're heading into the final quarter of 2025. There's been a lot of major advancements for crypto, a lot of regulatory changes that have paved the way for some of the announcements that we've talked about, and some of the advancements that you're looking to do. But looking ahead, end of the year into next year, what are the biggest hurdles or goals on the roadmap for the industry? What are the things that you're looking to accomplish as we move forward from some of the things that we talked about at the beginning of this year, some of those hurdles being cleared and going forward?
Yeah, that's a great question. I think that the most important thing that we need to focus on is privacy. We need to make sure that compliance sticks, and we need to make sure that the underlying frameworks are all there for these assets that are available, and we need to make sure that there's usage and that it's not just volume sitting on networks. I think that's a really important piece of it. What we care most about is making sure that we're moving with the industry and we're pushing the industry forward. And that is going to be confidential transactions. That's going to be making sure that you're thinking about ZK proofs and how you can leverage those in transactions to make sure that the transactions are still as transparent as they can be, but you're protecting the users or the businesses on the other side. That is what traditional finance is going to want. They're already asking for it. And so we really need to focus on that. So I see a lot of that happening in Q4, certainly for us, and then also going into next year. I think that that's going to be a key play for making sure all of this works and making sure that the infrastructure continues to be leveraged by these institutions that I think are really changing the world in terms of bringing these assets on chain.
Real quick on that point, talking about privacy, have you been having conversations with regulators and stakeholders about that push for privacy in the crypto ecosystem, and what have those conversations looked like?
Yeah, I mean, I think it's important not to lose sight of what's valuable about the blockchain infrastructure is that transparency. So you don't want to negate the transparency and you want that immutability to stick. But there are ways to obfuscate the senders and the receivers or to break up payments in a way that you can't actually allocate and figure out what particular payment was made because you've broken it up into a couple of different pieces. We've already seen folks in different chains try this. It needs to be something that's part of what we all consider. One of the things that we talk a lot with regulators and policymakers about is that it doesn't mean that everything that we did before in traditional financial infrastructure needs to be just applied to blockchain. You need to think about the new technologies and figure out how you can layer in privacy in these new technologies that still allows the really important pieces of those technologies to shine, but still protects the individuals and the businesses on each side of the transaction. So I think this is an important way to be having these discussions, is that it doesn't mean that it's going to be exactly what you're used to. There might be differences that we need to come in. And we also don't want regulation to layer on top of this right away. These are things that you need to sort of let play out and to see things happen and to see these different ideas come to the market. And then you can think about, okay, do we need a regulatory framework that can be a part of this? So We actually, just like with respect to so many things in crypto, a little bit of hesitancy to regulate immediately, but an engagement with regulators and policymakers to make sure that they understand we're all headed in the right direction.